Someone on Reddit said Phoenix real estate is in a full collapse, and I'm here to tell you that it is not true. Today, I'm breaking down the actual data, the stats I look at every single week, so you can stop scrolling through the scary headlines and start making decisions based on what's really happening. So, let's get into it. Before we dive in, if you're thinking about buying or selling in the Phoenix area and you want to know what the market looks like in your specific neighborhood or price range, drop a comment below or send me a message. I pull this data weekly and I love to share it with you personally. Hey, welcome. I'm so glad you're here. This channel is about giving you real, honest, data-backed insights into the Phoenix real estate market. No hype, no doom and gloom, just the facts. And today we have a lot to cover because there is some misinformation floating around out there that I really want to address. So I want to start with CMI. First things first, what is even CMI? CMI stands for the Cromford Market Index. Think of it like a scoreboard for the Phoenix real estate market. On one side, you have homes for sale, that's the supply. On the other side, you have people looking to buy, that's the demand. The CMI just tells us which side is winning right now. If there are more homes than buyers, buyers are in control. They can take their time, negotiate, ask for things. That's a buyer's market. If there are more buyers than homes, sellers are in control. Multiple offers, homes are flying off the market. That's a seller's market. And if they're about even, that's a balanced market, kind of the sweet spot. The CMI has been tracking this in Phoenix way back and since 2021. So we really have a long window to compare what's happening to what's been happening before. So this what makes it so valuable. So right now, that's the scoreboard. Yes, supply is ahead of demand. There are more homes than buyers, but I'm not going to sugarcoat that. But here's what I really want you to take away from this. This is not the most extreme supply and demand gap Phoenix has ever seen. It's not even close. So when I saw the Reddit post originally from Twitter or X claiming Phoenix is in full collapse, I had to laugh. Not some softness in the market, not a swift forward buyers, a full on collapse. Please be careful when you're getting your information or where you're getting your information from. Whoever wrote this was likely looking at Redfin data showing a 78% difference between sellers and buyers. And sure, that looks alarming on a chart, but when you zoom out and look at the full historical picture through the CMI, what are we seeing today is nothing like 2006, 7, and 8 when supply skyrocketed, demand tanked, and the gap was massive. That's what a collapse looks like. So let's look at our active listings. We have 25,003 active listings. What can I tell you about this? Inventory has risen from the pandemic lows. Uh, we all know that, but it's still nowhere close to what we saw during the great financial crisis when active listings across Phoenix Metro exceeded 50,000. We would need tens and thousands more homes hitting the market just to approach those levels. We are nowhere near that. Now, here's the thing, inventory rising isn't automatically bad. Back in 2014, when Phoenix was in a healthy, balanced market, we had comparable active listing levels. So having more homes to choose from is actually closer to normal than panic buying years we lived through in 21 and 22. The medium sale price right now is sitting at around 457, 250,000, roughly flat year over year. That's stability, that is not collapse. So, what about demand? Buyers don't register anywhere when you start their home search. So, it's hard to track them directly, but what we can look at is the listing under contract homes where buyers actually made an offer and the seller accepted. Right now, there are about 8,462 homes under contract across Phoenix Metro, and that's up about 8.4% compared to this time last year. Let me say that again because it's important. More homes are under contract than we were last year. That's the opposite of the collapsing market. If it doesn't make the headlines, but it does matter. Okay, so what does this mean for buyers and sellers right now? There's definitely opportunity here for buyers. Homes are sitting a little longer. We're averaging about 53 days on market right now, and sellers are having to work a little harder. Roughly one third of active listings have seen price reductions. And when homes do close, sellers are landing at about 97.5% of their last listed price on average. So they're still getting close to their number, just not at that 103% over ask we saw a couple of years ago. So here's what I find really interesting. More than 50% of closings in the last 30 days included seller concessions, things like rate buy downs, closing cost help, or repair credits. This is significant. Buyers are negotiating and sellers are meeting them at the table. That's actually a healthy, normal market doing what we're supposed to do. Let's look at the market by area. This is where it really gets important because not every part of the valley is the same right now, not even close. Places like Scottsdale, Chandler, and Gilbert are still leaning towards favorable, strong demand, controlled inventory. Homes are moving well. On the other end, areas like Buckeye, Queen Creek, Maricopa, giving buyers the most negotiation room in the valley right now. More selection, more incentives, more flexibility. And the luxury market, sales above 1 million are actually the strongest performing segments in the metro right now. Cash and equity buyers are still active, and that segment is far less affected by mortgage rates. That's why I keep saying you can't just look at the headline for the Phoenix market. It depends on where you are and what price range you're in. All right, let's talk about the mortgage rates. I know that's been a topic for a lot of people. We're at about 6.47% right now on a 30-year fixed. That's come down slightly from where we were a couple of weeks ago, but still elevated compared to where a lot of buyers were hoping we would be at by now. Economics experts expect rates to stay above 6% for the rest of the year. So, what does this mean in plain English? Higher rates mean tighter affordability, which does soften buyer demand. It is a real factor, but what's interesting is that buyers seem to be adapting. They're not disappearing, they're just being more deliberate. And more than half of the sellers are offering concessions. A lot of buyers are negotiating rate buy downs up front to lower their effective rate anyway. So here's the bottom line. The market is not a one size fits all. Some neighborhoods are moving fast, some price ranges are sitting. Sellers are negotiating more than we were 2 years ago, but a market where buyers have options and can negotiate is not a market collapse. It's a market returning to something closer to normal after of the wildest runs we've seen in Phoenix that Phoenix has ever seen. The data tells a clear story when you look at it. The data tells a clear story when you look at it honestly, and that's exactly why I keep doing this for you every single week. If you want to know what's happening in your specific zip code, price cuts, active listings, contract ratio, drop a comment or use the link below and I'll pull it for you. And subscribe if you want a real story on the Phoenix real estate every week. I will see you on the next video.